Good day, everyone. So, for today's discussion, we'll be talking about statement of cash flows. So, this is one of the components of your financial statements. So, our objectives are as follows. First is to understand the nature and purpose of a statement of cash flows, to understand the concept and components of cash and cash equivalents, to understand the classifications of cash flows as operating, investing, and financing, to be able to prepare a statement of cash flows using the direct method, and to be able to prepare a statement of cash flows using the indirect method. So to start, let us define what is a statement of cash flows. So a statement of cash flows is a component, as I mentioned, a component of your financial statements that summarizes the operating, investing, and financing activities of an entity. So let me change this. So again, it highlights the operating, investing, and financing activities of your company. Now, the primary purpose of your statement of cash flows is to provide relevant information about cash receipts and your cash payments during a period. Now, the cash flows or its output, of course, is the amount to be recorded as part of your, or the amount that is reflected as cash in your statement of financial position. So again, the amount or the ending balance of your final amount in your statement of cash flows should be the same as the balance of your cash that is reported in your balance sheet. So again, it deals with your cash receipts and cash payments. So with that, since you know that cash emphasizes or deals with your cash, let us briefly recall or go back again to the definition of what is cash and what is cash equivalent. So we have discussed this topic already in our previous discussion when we were talking about the financial positions, diba? So when we talk about cash, cash, of course, comprises your cash on hand and your demand deposits. So those include your bills and coins, diba? So that is your cash or your petty cash. Now, cash equivalents are defined as your short-term, highly liquid investments that are readily convertible into known amount of cash and which are subject to a significant risk of change in value. Now, according to your past 7, diba, an investment normally qualifies as cash equivalent only when it has a short maturity of 3 months or less from your date of acquisition. So I've already discussed this in when we were talking about your SFP. So again, it should be 3 months from the date of acquisition. Key term here or keywords here is your date of acquisition. So that would be your basis for when you consider an investment as part of your cash equivalents or not. So let's have some examples of your cash equivalents. So you have a 3-month BSP Treasury bill, a 3-year BSP Treasury bill. However, it was purchased 3 months, again 3 months before the date of maturity. So it means purchase, which is the date of acquisition. Still, it satisfied the condition that it should be 3 months or less from the date of acquisition, even though it is a 3-year bill. We also have 3-month time deposits and 3-month money market instrument or commercial paper. Now, as you remember, equity securities cannot qualify as cash equivalents because shares, of course, do not have maturity dates. Now, that is just a recap of what your cash and cash equivalents is. Now, let's talk about the classification of cash flows. So as mentioned, when you say cash flows, it talks about your cash inflows or your cash receipts and your cash outflows or your cash disbursements or cash payments. So that is why when you talk about statement of cash flows, again, it was mentioned, it relates to the inflow and outflow of your cash and cash equivalents. Now, the statement of cash flows shall report your cash flows during the period classified under operating activities, investing activities, and financing activities. So again, you need to classify which specific activity does a certain transaction fall. Now, we have here is not really a special, but we have here the term bank overdrafts, which I believe you've already encountered this in your bank recon, diba? So, when we say bank overdrafts, these are repayable on demand form, or these are payable on demand that form an integral part of the entity's cash management. So, when you say bank overdrafts, it is when the balance in your bank account or the company's account is negative already, diba? That is when we say that it is an overdraft. Now, there are certain circumstances wherein bank overdrafts are included as part of your cash and cash equivalents, because again, they are they are special arrangements between the banking financial institution, and the company itself. So that is why there are instances wherein bank overdrafts are considered as part of your cash and cash equivalents because technically they aren't negative amounts. However, in the Philippines, bank overdrafts are not permitted. That is why it is not included as part, if you can remember, diba, in your cash and cash equivalents. We were talking about cash and cash equivalents, and even in your bank reconciliation, bank overdrafts are not included. So, mali siya. Next, let's first talk about the operating activities. So, we will be discussing these activities one by one. So, let's start with operating activities. Now, operating activities are, excuse me, the cash flows derive primarily from the principal revenue producing activities of the entity. Meaning, when you say operating activities, these are the cash flows that you get with your regular or normal course of your business, or your operating business. Examples of which include your cash receipts from sale of goods and rendering of services, your cash receipts from royalties, rentals, fees, commissions, and other revenue, your cash payments to suppliers of goods and services, and your cash payments for selling, administrative, and other expenses. Other examples include cash receipts and cash payments of an insurance enterprise for premiums and claims, annuities, and other policy benefits, cash payments or refunds of income taxes unless they can be specifically identified with financing and investing activities, and cash receipts and payments for securities held for dealing or trading purposes. So these are just some of the examples of your cash flows from your operating activities. Now, when we talk about trading securities, as mentioned in the examples, diba? Past 7, paragraph 15 provides that cash flows arising from purchase and sale of dealings or trading securities are classified as operating activities. So, similarly, cash advances and loans made by a financial institution are usually classified as operating activities since they relate to the main revenue producing activity of the entity. Now, this is where the confusion might come in. You still need, in determining if it is part of your operating activities, you need to take into consideration the nature of business of your company. So for example, when we are talking about financial institutions, 'di ba? They usually deal with loans, advances, 'di ba? Or kanang mga mortgage payables and so on and so forth. So that is their ordinary course of business, 'di ba? So that is their main revenue producing activity. However, for some companies, since they are dealing with financial institutions, they would think or they would include it as part of their financing activities. However, if you are the financial institution, it would be part of your operating activities. So that is the part wherein you need to be careful, especially if the specific industry is mentioned, 'di ba? What kind of industry the client or the company is involved in. So then it would differ if it is part of his or her what do you call that, operating or not. Now let's move on. Operating activities is just very easy to identify, no, because again they involve the um, primary operations of the company. Now, let's move on to investing activities. Now, investing activities are cash flows derived from the acquisition and disposal of long-term assets and other investments which are not included in cash equivalents. So, when we talk about investing activities, they usually involve transactions that involve with non-operating activities. So, if or not non-operating activities, but non-operating assets, which includes again your long-term assets, or for example your PPE, diba? So they are non-operating assets. So kanang nasa mo mga non-current na asset or transactions that involve your non-current assets, those are usually considered as part of your investing activities. However, not all, but mostly or usually they are part of your investing activities since those assets are your non-operating assets. Your operating assets are usually part of your current assets, di ba? So, examples of cash flows from investing activities include um, cash payments to acquire PPE, intangibles, and other long-term assets. We also have cash receipts from sales of PPE, intangibles, and other long-term assets. We have cash payments to acquire equity or debt instruments of other entities and interest in joint ventures. We have cash receipts from sales of equity or debt instrument of other entities and interest in joint venture. We also have cash advances and loans to other parties other than advances and loans made by financial institutions, because again, they have a different classification. Cash receipts from repayment of advances and loans made to other parties. We have cash payments for future contract, forward contract, option contract, and swap contract. Same with cash receipts for the same kinds of contract. So, kanisya ng mga contracts is na-discuss. Hopefully, it was already discussed in your AFAR, no? So that is your investing activities. Now let's move on to the financing activities. Now, financing activities are the cash flows derived from the equity capital and borrowing of the entity. So again, keyword is equity capital and borrowing. Therefore, um, financing activities are cash flows that result from either equity financing, which is the transaction between the entity and the owners. For example, issuance of shares, diba? So that is a form of equity financing. Or debt financing between the entity and the creditor. So, diri mo come in ang imong mga loans. So, creditors are usually financial institutions. Diba? Mauna nga ma-confuse usahay if usaon pag-recognize, diba? Marini mo hang hinumduman basta financing, either equity or debt financing. So, financing activities include cash flows from transactions involving non-trade liabilities and the equity of an entity. So, if you divide your financial components of your statement of financial position, no? Ari sa data sa examples before that, kay para mas clearly identify ninyo. So, here are the examples of your financing activities: cash receipts from issuing shares or other equity instruments. For example, issuance of ordinary and preference shares. Letter B, cash payments to owners to acquire or redeem the enterprise shares. Excuse me. For example, payment of treasury shares. We have cash receipts for issuing debentures, loans, notes, bonds, mortgages, and other short or long-term borrowings. Another is cash payments for amounts borrowed. Next is cash payments by a lessee for the reduction of the outstanding lease liability. So, cash payments to settle obligations such as trade accounts and notes payable, income tax payable, accrued expenses, and other similar items are considered as part of your operating activities because those are trade liabilities, diba? So, meaning they are not part of your finance activities. So, if you look at it, if you, as I mentioned a while ago, if you divide the components of your statement of financial position, diba, you have your assets, liability, and owner's equity. Let's have a pen. So your assets are divided into two, diba? You have your current asset, you have your non-current asset. Non-current asset. Pardon my handwriting. Then your liability is your current liability and your non-current liability. And then you have your equity. So if you would classify where these components should be included as your, or how would you classify these components as part of your cash flows, your current assets would most likely be part of your operating activities. Your non-current assets would be part of your investing activities. Your current liabilities would be part of your operating activities. Your non-current and your equity would be part of your financing. However, this is just a general guide. Okay, this is just a general guide. Not all current assets is part sa imuhang operating. Same with not all non-current assets is part of your investing. Not all equity is part of your financing. So again, these are just general guidelines. There are still exemptions, 'di ba? So kaya lang siya, so that you will be guided para di mo ma-confuse if it should be recorded as part of your operating, investing, or financing. So this is just that is just a general guide for you. Now, let's move on to non-cash transactions. So, PAS 7, paragraph 43 provides that investing and financing transactions that do not require the use of cash or cash equivalents shall be excluded from the statement of financial, or from the statement rather of your cash flows. Again, they should be excluded. Such transactions shall be disclosed elsewhere in the financial statements, either in the notes to financial statement or in a separate schedule, or in a way that provides all relevant information about these transactions. So again, the statement of cash flows is strictly a cash concept, meaning iyaharag yung gi-monitor ang lihok sa imuhang cash. Therefore, if you have non-cash transactions, they should not be part of your statement of cash flows. Diba? Just common sense. Examples, include those non-cash transactions that should not be part of your SCF but are rather disclosed. You have the acquisition of asset either by assuming directly related liability. You have the acquisition of asset by means of issuing share capital. You have the conversion of bonds payable to share capital and the conversion of preference share to ordinary share. That is why, as I mentioned a while ago, not all part of your current asset or non-current asset should be, for example, not all part of your non-current asset should be part of your um, should be considered rather as an investing activity because again, not all transactions pertaining to non-current assets would be cash-related transactions. Diba? So you can acquire an asset by means of issuing a share capital. So meaning there was no cash involved there. However, that asset would still be part of your non-current asset, diba? However, wala na lang siya nakita or dili siya makitaan or dili siya mo form part as your investing activity. So, na siya. You also have conversion of bonds payable to share capital and conversion of preference share to ordinary share. So again, non-cash transactions are not included in your SFC but are disclosed in your notes. Next, we have interest. Now, past 7, paragraph 33, provides that interest paid and interest earned shall be classified as operating cash flows because they enter into the determination of net income or loss. Alternatively, interest paid may be classified as financing cash flows because it is a cost of obtaining financial resources. For example, when you are when you have a bank loan, 'di ba? You pay interest. Now, bank loan is a debt financing. So you would classify it as part of your financing activity. Alternatively as well, your interest received may be classified as investing cash flows because it is a return on investment. So, for a financial institution, interest paid and interest received are usually classified as part of operating cash flows because as I mentioned a while ago, that is their normal operating activity. However, for those companies that are not financial institutions, manufacturing, diba? So, the recognition of their interest payments or interest incomes shall be classified as a consistent manner from period to period as either investing, operating, or financing. One thing that needs to be observed though is again, it should be consistent. So meaning, the company has the discretion if unsaon niya pag or asa niya i-classify ang imuhang interest. So nara nila kung operating ba, kung ganun sa investing or sa financing. However, dapat mo match gihapon ha. So kana siya. Or not mo match, but however it should still be consistent. Dili pa din na current na period is recognized nimo siya as operating. However, ika next period kay mag-investing na pud ka, kasunod mag-financing na pud ka. So di ba mawala na ang consistency ana. So if imo siya i-recognize as part, is imo siya i-classify as part of your operating, of course in the next period it will still be under operating and so on and so forth. Another issue is with regards to your dividends. Now dividends, according to past 7, should be classified as part of your operating cash flows because it enters into the determination of your net income. However, dividend received may be classified as investing cash flow because it is a return on investment, and at the same time, your dividend paid shall be classified as financing because it is cost of obtaining financial resources. So, in this case, equity. Nag-equity financing na ka. Now, um, alternatively, dividend paid may be classified as operating cash flow in order to assist users to determine the ability of the entity to pay dividends out of operating cash flows. Now, same with your interest. The company has the discretion on whether it would classify it as part of operating, investing, or financing. Basta consistent lang gid siya from time to time or from period to period. So, company discretion siya. Next issue is on income taxes. So, past 7, paragraph 35 provides that cash flows arising from income taxes shall be separately disclosed as cash flows from operating activities unless they can be specifically identified with investing and financing activities. So tax cash flows are often difficult to match to the originating underlying transactions. So most of the time, all tax cash flows are classified as arising from operating activities. So, iyang default is operating activities. However, if you can specifically identify if it is part of your investing, or diba, if the tax is related to a part of your PPE, so hog siya nga investing, di ba? So kana siya, recognize nimo siya as part of your investing, or if the tax is in relation to your financing, so part siya as financing activity. However, by default, it is recognized or it is classified as part of your operating activities. Now, there are two methods in reporting your cash flows from operating activities. So again, these two methods only apply to cash flows from operating activities. Wala ni siya ni apply sa imong investing o financing ha. Sa operating na ni siya. So you have direct method and indirect method. Now, the direct method shows in detail or itemizes the major classes of gross cash receipts and gross cash payments. The cash receipts are listed one by one, the cash payments are listed one by one, and the difference represents the net cash flow from operating activities. So, in essence, the direct method is the cash basis of your income statement. Mo na siya. Cash basis siya. Kaya, di ba, imo man gi-recognize or imo man gilista na imong cash receipts o imong cash payments. So, basically, mo siyang murag cash basis. So, yan na. So, if you think about it, your statement of cash flows is sort of like a conversion from your accrual basis to the cash basis of accounting. Mo na siya ang kuan if you really think about it. So, mo na imong i-take into consideration, di ba? To further understand it, let's have this example. So, you are given the statement of financial position for 2019 and 2020. So, you have here 2019 and 2020. And you also have your income statement. Now, you are asked to find the net cash provided by your operating activities. Now, at first glance, if you look at the balance sheet, di ba, makabaw na kang that your net cash would be 1 million because of course, you have here 2 million and you have 3 million. So, the net difference is there is an increase of 1 million. Now, question is, how did we arrive at the 1 million or from 2 million, how did it become 3 million? Now, take note, your direct method shows in detail or itemizes your cash receipts and cash disbursements. So, let's first try to identify unsa ang mga items that are applicable to your cash receipts or siya connection sa imong cash receipts o sa imong cash disbursements. So, when we talk about cash receipts, di ba, of course, we have your sales. So, you have here, oops, di siya makita. Let's change the color. Let's change it. Okay, let's change it. Let's have orange. Okay. So, you have your cash, in relation to your cash receipts, you have, of course, your sales. However, diba, if you can remember, your sales is comprised, let's not highlight it because you cannot really see. I'm so sorry. So, Let's just use a pen. Okay. So you have here your sales. So remember your sales, it is part of your can be part of your cash receipts. However, take note, your sales can be cash, di ba? Kung mag-record kasi mo sales, it can be cash or pwede siya accounts receivable or on credit, di ba? So, meaning, your accounts receivable here is also included. So, as you can see, there is an increase of your accounts receivable in the amount of, let's see the increase. So there is an increase of 590 on your accounts receivable. So meaning kani imong sales nga 650 di ay dili ka ng whole not 650 but 6.5 is dili ka na tanan is cash na siya. Na ay 590 na allocated to your accounts receivable or on credit siya. So meaning the cash component of your sales is only your 6.5 minus the difference of your receivable, di ba? So, therefore, you have 5.91. So, paano siya imong kan? 5.91. Just take note of it. So, kamo na list down niya. So, again, you have collections of 5.91, di ba? What else is related to your what do you call that? Cash receipts. So you have your another form of your income is your rent income. So you have here a rent income of 80,000. Now if you take a look at your what do you call that? Balance sheet na ba related sa imong income or rent income? You have here your unearned rent income. So meaning from 40 is nigamay na siya or na-earn na ka nga 30. So again, this would still impact your collection, di ba? So, sa imuhang na-earn ani nga rent income na 80, na siya component diri nga cash siya nga rent income, na component nga sa imuha siyang unearned. So, di ba, from 40, nahimo na mala siyang 10, so meaning nakaka-recognize nga 30 for the year 2020. So, ang kani imuhang rent income diri, ang cash component ra niya is ang imuharang 80 minus 30. So, you have 50,000 ra ang component dapat or ang cash component sa imuhang rent income diri. So, you have siya, collections, and then rent income. Napabatay lain in relation to cash receipts. I think wala na, no? So, let's move on to our disbursements. So, for our disbursements, ano ito na sa ito ang purchases. So, you have your purchases. And then, in relation to your purchases, of course, you have your accounts payable. Diba? So, as you can see here, yung accounts payable is na siya increase of 20. So, meaning, out of your purchase nga 3.2 million, ang 20 ana niya is imong gi-purchase on account. So, meaning, wala dyan kayo gi-disburse nga cash ana. So, instead of total payments sa imuhang purchases of 3.2, mahimo na lang siyang 3.18 million. Mo na siya imuhang payments to merchandise creditor. So, I hope you are taking down notes, no? Next is, what else is related sa atong disbursements? So, since nagtanong tag disbursements, alay tatanong sa atong expenses. So, you have our salaries here, 950. So, tanong diri sa atong salaries, accrued salaries payable. So, na-ay increase nga 35. So, meaning, out of kaning 950, ang ato ang na-disburse ra gyud nga cash is less sa katong increase nga 15. So, meaning, ang dapat nga, ang cash disbursed ra nimo for salaries is only at 935,000. For insurance, you have, where is insurance? Here, prepaid insurance. So, kani siya, 15 and 20. So, your insurance is na ay decrease sa imuhang insurance. So, meaning ang 5,000 kay imuha nang na-recognize for the year 2020. So, ang kaning total amount diri ang na-disburse ta gyud nimo or na ay cash disbursement ra gyud is only 35,000. Kay the 5,000 is in relation to the recognition of your prepaid the recognition of your insurance expense in relation to your prepayment. Next is, unsa pa man? Unsa pa man natin disbursement. Interest. Interest. Kani in relation to your interest. So, interest, naputi accrued interest payable diri. Oh, still the same. Same ra kag analysis sa kaning imuhang salaries. So, naa kay decrease in 5,000 sa imuhang liability. Oh, so, meaning, ang imuha total interest paid is, pila man, instead of 55, since ni-decrease man siya, so naka-additional nga 5,000 nga bayad sa imuhang liabilities, diba? So, that should be 60,000. And then, another is your income tax. Oh, which is the amount of 350. And then, you have here your income tax payable. So, naka-increase of 100,000. So, meaning, ang kanang imuhang income tax is mo, from 350 is, ang 100,000 is related man sa imuhang recognition sa imuhang payable, diba? So, mahimo na lang siyang, imong gi-disburse is mahimo na lang 250. So, if we, again, remember, we are only talking about cash or in relation to your cash disbursements. Ngano ang uban na kay wala gi-appeal? So, first is other expenses. Of course, kanang other expenses is kani siya, appeal na siya, no? Or ma-recognize na nimo siya later on. Depreciation is nakagi-disburse nga cash or wala. Diba, depreciation is technically wala kay gi-disburse nga cash. So, it should not be part of your cash flows. Same with your amortization. So, kani siya imong depreciation ug amortization should not appear in your statement of cash flows using the direct method because again, these are non-cash ni sila nga mga transactions or non-cash na mga expenses. So, if ato-atong itali tanan, diba, we have here cash received from customers, 5,910 plus 50, then less sa imuhang mga cash disbursements. So, you have cash generated from operations, and then you have your interest paid and income tax paid. So, you have net cash provided by operating activities, which is 1 million. So, mo ni siya katuwang difference sa imuhang diri di ba? Given nga sa imuha ra siyang operating activities ra ang nahitabo for that year. So, again, this method only applies to operating activities. Wala tay direct method sa imuhang investing o financing, ha? Now, according to PAS 7, it provides that entities are encouraged to report cash flows from operating activities using the direct method. So, encourage lang siya. Dili siya compulsory nga maoy gamiton sa imuhang entity. Now, next, let's move on to your indirect method. So, the indirect method means that net income or loss is adjusted for the effects of transactions of non-cash nature, any deferrals or accruals of past or future operating cash receipts and payments, and items of income or expense associated with investing and financing. So, the indirect method of presenting the cash flows from operations begins with the accrual basis of net income and applies a series of adjustments to convert the income to a cash basis. So, that is why, as I mentioned a while ago, Your statement of cash flows is like a conversion from your accrual to cash basis of accounting. So the following general guidelines are offered for the adjustments of net income to cash basis. So first we have here all increase in trade non-cash current assets are deducted from your net income. Again, increase in trade deducted from net income. All decrease are added to net income. Now, number 3, all increase in trade current liabilities are added to net income. All decrease in trade current liabilities are deducted from net income. So, these 4, kaning pinakaunang 4 is ma-understand niya na to na later on if na example. 5 is already mentioned this one. Depreciation, amortization, and other non-cash expenses are added back to your net income to eliminate the effect that they had on net income. So, if sa direct method is wala na to gi-appeal ang atoang depreciation o amortization because they are non-cash transactions, in the indirect method, we take them into consideration by adding them back to your net income because they are non-cash transactions. Remember, we are starting with the net income using the accrual basis. So, para mahimo siyang cash basis, ipangbalik nato to ang katong mga deductions nga gideduct nimo sa imuhang net income pero supposedly is di ta siya i-deduct under cash basis kay tungod non-cash transaction man siya. So, mo na ang imuhang depreciation o amortization. Now, any gain on disposal of property or gain on early retirement of non-trade liabilities is included in net income, but it is a non-operating item. Thus, this is deducted from your net income. Any loss on disposal of property or loss on early retirement of non-trade liabilities is deducted from net income, but it is a non-operating activity. Thus, this is added back to your net income. Then, other non-cash item or gain is deducted from net income, and other non-cash expense or loss is added to net income to eliminate the effect on net income. So, to further, para mas ma-better understand na to siya. Remember, as mentioned, indirect method is mag-start sa iya sa imuhang mag-start siya sa imuhang accrual basis na net income. In this case, it starts at 1.5 or 1.5 million. Now, the first the first guideline states that all increase in trade non-cash current assets are deducted from your net income and vice versa if naa siya decrease. So, meaning, ari ka mo tan-aw sa imuhang statement of financial position. So, as you can see here, unsa man ang imuhang mga non-cash nga current assets. So, you have your accounts receivable, inventory, and your prepaid insurance. Diba? Mo na imuhang mga non-cash na current assets. So, if there is an increase daw sa imuhang non-cash nga current assets, they are deducted from your net income. So, in this case, you have the 940 minus 350, so their difference is 590, and then they are deducted. If maka-remember mo sa ato ang gibuhat ganiha, atong derita sa sales, di ba? The difference of the 940 ug 350 is atoa pod siyang gideduct sa atoang sales nga 6.5 million para makuha ang imuhang total nga cash collections from your customers. So basically, pariha ra gyud ang imuhang gibuhat. Diri lang is sa presentation lang siya. Kas ganiha, ang difference aning imuhang cash receivable is gidiretso siya og reflect sa imuhang sales palangdaan so katong sa collection. So ari ka sa collection nag-change or ari ka sa katong ari nimo siya sa sales gi-deduct. this time is ari na lang siya sa final na nga net income. However, the effect and the what you call that, ang iyahang reason or general reason is basically the same ra siya, di ba? So again, nganong i-deduct man nimo ang imuhang increase in accounts receivable? Because an increase in your non-cash nga current asset would mean nga separate component siya sa kanang imuhang, para sa tungkol nga separate component siya, di ba? So mo jud ang best example is kaning sa imuhang what you call that, kaning sa imuhang sales, di ba? So ang sales nimo nga 6.5, dili man ang whole amount ana niya is cash man, di ba? So naaman siya component nga non-cash. So mo na ang katong component na non-cash is dili to nimo siya i-appeal because again, non-cash transactions are not included in your statement of cash flows. So meaning imo siyang kuhaon sa imuhang statement of cash flows. So mo na siya imuhang increase in your income, or not income, but increase in your non-cash current assets would be a deduction to your net income. So, deduction rate. So, kaning inventory, na siya increase nga 75, it is also a deduction. Kaning imuhang prepaid insurance, there is a decrease nga 5,000. So, if maka-remember mo, diba, diri sa atong insurance, so, there is a decrease of 5,000. So, i-add back na nato siya sa ato ang what do you call that? I-add back na nato siya sa ato ang, or the decrease in insurance is added back to your net income. So, ano siya? And then, same would happen or same would apply to your liabilities. So, you have here your accounts payable, accrued salaries payable, accrued interest payable, what do you call that? Income tax payable, unearned rent income. So, kani siya nga mga changes or imo gyapon kaon ang iyang mga differences, no? So, kana siya. Next is so if imuhang kaon iyang tanan nga differences, so you will arrive at these amounts, and then, di ba, imuha siyang again, ang katong mention ganiha, the increase is imuha siyang increase in current asset is deduction, so mo ni yung 590, then ang imong prepaid insurance is addition, then ang sa imuhang payable is, or sa imuhang liability is same man siya. So, ang increase is increase po sa imuhang payable. So, sa payable is same magyapon siya og concept. If mo dako man imuhang payable, di ba, is meaning, for example, kung mangutang ka og cash, or kung mo dako imuhang payable, di ba, is meaning nawa kay nakuha na cash, or na kay na-keep nga cash. Di ba, instead of paying it, instead of disbursing it, kay imo pa siyang na-keep. So, meaning, increase imuhang cash. Mo na addition siya sa imuhang net income. Mo na ang ihang concept. So, mo na same na dire. And then, ang napuno ra is again, your mga other non-cash transactions. So, your depreciation or your amortization is again added back. And still the same, you would arrive at 1 million. So, ana lang siya. I hope nga nakagets ra mo, no? Nakagets ra mo sa concept nga, no? So, what is confusing here is ang imuha lang yung bantayan always is ang kanila sa increase or decrease kay para di mo ma-confuse. So mo na siya. If when you talk about asset or current asset, ang iyahang impact sa imuhang net income is bali siya. So kung ni-increase siya kay decrease na siya iyang impact sa imuhang net asset. Sa imuhang liabilities is the same siya. So more like ako personally more na ako ang hinumduman. Else. So matawa ng spade. So kaya decrease kaning part na lang. Like decrease in prepaid insurance. If remember mo sa ato ang gibuhat ganiha is ato man tong gideduct ato ang prepaid nga 5,000, di ba? Gideduct man ato siya sa ato expenses. However, remember this is an expense. Again, take note, you are dealing with an expense. So, kung mag-deduct ka sa imuhang expense, ang meaning bayaan niya kay mugamay ang imuhang net income. However, ang atoa bayang the purpose here is ganong gi-deduct, gi-add back siya sa atong indirect method is again, wala man kay gi-disburse ana nga time. So, technically, wala kay cash nga gibayad. Kay tungod ni bayad na makana niya daan. Kay prepayment, ba na nimo siya. So, mo na, iyang overall effect in your net income is an increase. Mo nang deduct siya sa imuhang net expense kay para mo increase imuhang net income. Mo nang gibuhat nato sa ato ang direct method. If maka-remember mo, balik to dire. Diba? If you can see here, 35 naman siya instead of 40. Kay, again, ang ihang purpose ba is i-increase in your income. So, maka-increase ba siya sa imong net income. Mauna siya nga, add to ang nahitabo diri nga part na. Mo nang i-decrease in your asset is a increase in your net income. So, that is your net cash provided by operating activities. So, again, still the same with your direct method. Dili wala gi-comply nga indirect method ang imong ganito. So it is company discretion if how they would like their operating activities to be presented, whether direct method or indirect method. So kana lang siya. Now, I hope you understood, no? So again, this only applies to operating activities. Sa imong investing in your investing and your financing activities, PAS 7, paragraph 21 provides that an entity shall report separately major classes of gross cash receipts and gross cash payments arising from your investing and financing activities using the direct method. So, kaning imong indirect method, kaning murag difference na lang duha, is dili na siya applicable when it comes to your financing and investing activities. So, kana siya. I hope you understood. Now, for a more comprehensive example, you can refer to your book, diba? So, nanay part dito ang sa imuhang investing o financing. However, sa investing o financing is dali na malanggod siya. So, dali na good siya. You just have to identify those that involve cash transactions. So, if you acquired PPE for cash, mo na siya imong i-recognize as a deduction siya kay di ba cash payment man. So recorded siya under investing. So ina na siya mo ra gid ang imuhang huna-hunaon there is as when you are when you are trying to analyze or trying to make a statement of cash flows, what you just need to keep in mind is you need to follow the cash basis of accounting. Kana lang gyud ang imong i-take into consideration. So, ang imuha lang gyud is tanang transactions nga naay relation to cash. Maura ang imuhang i-recognize kana siya. So, maura gyud ang imuhang pagabantayan. So, Hana, see ya. I hope you understood. However, if you have other questions or you have clarifications as to the statement of cash flows, is pwede rin ninyo i-chat sa atuang group chat.